Good morning, good afternoon, good evening, depending where you are on the planet. And welcome to the Bull versus Bear webinar. Steve Miley on the call on Wednesday, the 27th of July for Trade Day. Welcome, everyone. We're going to go for our normal regular run through today. I'm not going to go into a huge amount of detail because clearly, it's all going to be about the Fed, right? So, how much analysis we do. We can look at trigger points on the charts, but pretty much what I've got lined up is all about the Fed. So there's not a huge amount to say pre-Fed, right? But I will go through and give you what I can. So little out of Europe this morning. We did get this GfK German consumer climate data. Slight miss on expectations there. Going into today, we do actually have some data ahead of the Fed. Durable goods. I don't think that's going to really move markets, given we've got the Fed on the horizon, and also retail inventories. So durable goods, retail inventories coming up in just under 1 hour now. And then we have crude oil inventory data as well. That could move, obviously, the oil market ahead of the Fed. So that's at 10:30 Eastern time, 9:30 Central. So watching out for that. Then all eyes on the Fed at 2 o'clock Eastern. And then we have the press conference at 2:30 in the afternoon Eastern. So all eyes are going to be on that. Let's just have a little recap, though, from yesterday. So we did get a dip lower yesterday. Led lower by tech, which was a little disappointing initially, and then a strong rebound overnight, despite in here the earnings calendar. So after the bell, so the market sold off, through the session, but then kind of an acceleration into the close. And then we had, but not a big sell-off in here. If we go and take a look at where we were yesterday, where are we? US stocks. So in here, the Dow was down 0.7, S&P was down 1%, about 1.5%. I think we were on NASDAQ. But we have bounced, and the bounce has come from, even though you'll see a sea of red for Microsoft and Google in here. Okay. So they missed on earnings and revenue. The kind of forward guidance wasn't too bad. Okay, in fact, if anything, the forward guidance was positive. And overnight, so the Microsoft Alphabet earnings lift futures. Okay, so they lift futures, even though, as you can see in here from the calendar, they're actually missed. Okay, they're missed on where the consensus were. So even though they missed in here, some of the forward guidance was more positive. Maybe not missing by as much. So in here, look, it was better than feared quarterly reports from technology giants Microsoft calmed investor fears. Okay, result lifted sentiment after markets close sharply lower on Tuesday. So and that was driven lower by Walmart. So we were driven lower yesterday by Walmart. Where's Walmart from Tuesday? A little bit further down, we had a profit warning from Walmart. Don't see it there. Why is that not coming up? Can't see that. Walmart should be in there. It's not jumping to hand, but maybe it wasn't. Maybe they wasn't in earnings. Maybe I think it might be a separate profit warning. Then it wasn't actually with their earnings release. So Walmart in here giving a profit warning yesterday sent the stocks lower through the session, and then a weak close, and then rebounding. And you can see in here if we go to what's on the overnight in here, having dropped, 0.7 on the Dow and 1.15, I think about 1.5 on the NASDAQ. For some reason, it never shows it in here, but we've recouped a lot of yesterday's losses. Nearly 0.4 on the Dow, about 0.5%. Not quite, half of what we got back in here. But the NASDAQ, surging back higher, obviously because we're rebounding with tech. But the NASDAQ was down, I think, closer to 2% yesterday, 1.5 to 2%. So, definitely a solid rebound in here from the tech sector on the back of earnings, which on the face of it, we missed in here. But as I say in here, if you dig a little bit deeper, we had markets are looking a bit up. Microsoft's up 3.8% and Google up 3.5% in pre-market today. So let's take a look at 5 things you start your day. So tech beats. Okay, so again, Texas Instruments also double-digit quarterly revenue growth on Tuesday and expect optimism about the coming month. So it was more the optimism because they did actually miss regarding the actual consensus expectations. Okay, so Fed Day. Okay, we'll talk a little bit more about that, but not a huge amount to say. Credit Suisse replaced their CEO. Stocks up overnight in here, and it's all about the Fed, apart from the data we've already gone through. So if we go around for your US futures rise on earnings, so again, Google parent Alphabet, Microsoft lift NASDAQ futures. We've already kind of gone through that. Countdown to Fed. Oil's up as well. That was on the crude inventory data yesterday. We've got further crude inventory data today. So crude inventory fell by 4 million barrels last week, according to API. So we saw oil rallying. This is just of interest if you follow. We talked about Coinbase yesterday being, and I showed you the article. Actually, I've written another follow-up article today in here. Coinbase stock plunges amid SEC investigation. If you want to go and take a look at that one, I'm not sure if you can kind of. Oh, thank you. It was just a business update. Oh, thank you, whoever that is at WBR55. Thanks for that. So it was just an update. Yeah, it wasn't an earnings release, right? From Walmart. Thank you for that. Can you guys see? I've just posted into the chat. We should do a little experiment on this, James and I. But can you see? I've just posted that. So I mean, this is not particularly interesting, but it's just interesting whether you can see the link. I posted a link underneath in the chat and a response. So hopefully you can see that as well. But there's basically Coinbase plunged yesterday by about 20%. Oh, you can see it. Cool. It plunged 20% yesterday, and that was on the back of the fact that the SEC investigating Coinbase for potentially listing securities, which they're not allowed to do because they're not regulated, but they're contesting whether what they're listing are actual securities. This doesn't really impact on what we're talking about, but that kind of adds to a little bit to the risk-off scenario that we saw for yesterday. But I think it's more. I don't think that it flows that way. When you talk about the dog wagging the tail or the tail wagging the dog, I think the stocks wag the tail of the crypto markets. It's not really crypto wagging the equity markets, right? So if stocks, there is a positive correlation between stocks and crypto at the moment. Stocks down pulls crypto lower. I don't think crypto being pulled lower on the back of this is necessarily going to pull stocks lower, but it can happen a little bit. But I just thought I'd point that out anyway. JP Morgan forecasts Eurozone recession, gas crisis looms. We've been speaking about the gas problems in here. Yesterday, we saw European gas, Europe pass a resolution to try and curb the amount of gas usage, to build up stocks for the winter, because there's real concerns that Russia are going to turn the taps off, they've already turned the taps down, and they're blaming problems with the Nord Stream pipeline. However, it's a political game to put pressure on Europe to pull their support for Ukraine. So that's going to play out. Not right now. It's going to play out probably as we move more into the winter. And JP Morgan forecasting a Eurozone recession. We could be going into recession anyway, regardless of that. But if we have obviously issues with gas supply as well, an energy crisis, that's going to only exacerbate issues within Europe compared to the rest of the planet, very much reliant on Russian gas in here. No surprises, Fed to unveil another big rate hike as signs of economic slowdown grow. So if we look at the Fed tool, the CME tool in here, sorry, wrong tab. If we look at the Fed tool in here, pretty much not completely nailed on, but outside chance here of a 1% rate hike. This is signaling, and I don't know if you guys have used this tool. I'll share that in the chat as well, but it's a useful tool from the CME. It's based on the euro-dollar curve in here, and so 76% chance of a 75 basis point. And only less than 25% chance of a full point. The Fed have been flagging 75. I'd be shocked if they go for a full point rate hike. There's been nothing. They've been given ample opportunity. Even the hawks have been given opportunity to say a 1 point hike, and they haven't really taken the opportunity. I'd be shocked if they go 1 point. I'd be shocked if they go less than 75 as well. If they go either 50 or 100, I think the market, when I say the market, I'm talking about the stock market, will take it negatively. Either way, I think the market needs the 75. If they go 50, it'll be seen as them being too dovish on inflation. If they go 100, it'll be seen as maybe tipping the US into recession. It's just interesting if we go a little further out to the next meeting, which is until the 21st of September, because we've got the summer recess. So we've got no meeting in August. So you've got 2 months now pretty much to the next meeting. You see here, we've got now a 50-50, almost 50-50. You've got an outside chance of it going up to 325. Now, that's up 175 from where we are now, right? So that would be a very aggressive move, 175 up. It's talking about 100 and another 75 in here. But what we're expecting is here one of these two scenarios. And this scenario here, so here is expecting 275s. Or 150 maybe, but more likely 275s. Here we're looking for a 75 and a 50. So it's going to be really interesting. This is almost certainly going to change when we get the guidance. It's all going to be on the guidance. Is the next rate hike going to drop back to the 50s? Are they going to pursue the 75s going forward? Okay. And this is almost certainly going to look very different when we look at it tomorrow. Okay. My feeling is they'll back off. I think they'll give some guidance of we've been quite aggressive. We're seeing, I would be surprised to hear them say we're seeing some moderation in inflation. Now, I know inflation figures keep going up and up and up and up and up, but they're really going to be concerned they don't want to tip the economy into what's likely to be a recession anyway, but into a deeper recession. We're probably going to have what I would call a soft hard landing. A hard landing is when you go into recession. A soft landing when you get slowdown, but you don't go into recession. The likelihood is we're going to go very much to close to zero growth. Maybe go to negative growth, but might not to get 2 quarters. You might not get a full recession. You might get a soft landing or a kind of a soft hard landing where you might get a recession, but a very mild one. What they don't want to do is tip us into a more aggressive recession. So I think my feelings, okay, and I've got, this is based on the fact that they've gone from being fairly dovish, they've become more and more and more and more hawkish, and they're ahead of the curve now. If anything, they're with the curve or ahead of the curve, right? This is what it's telling you. They're ahead of the curve. They're telling you 75s, and the curve's now saying, well, we're going to be happy with maybe only a 75 and a 50, right? Okay, so the curve's now more saying, you don't need to continue at this pace kind of stuff. So I wouldn't be surprised if they back off and we see this one jump up in here tomorrow and they signal maybe we're going to wait and see approach. And now they do have a wait and see, right? Because they've got 2 months. However, there's nothing to stop them having an emergency rate hike. They could step in August and make another rate hike. That has been done in the past before. They have had interim, over the decades. Unlikely to happen, but it could happen, right? Okay. What else we got in here for you? So, so let's just go to the charts, really. I'm going to do a fairly quick run from the charts. And the reason it's going to be a little quicker than normal in here, guys, is I'm pretty much, I don't want to sing my praises, but pretty much nailed it yesterday. I'm the eternal bull, but we were bearish yesterday. We showed this pattern here, right? And the NASDAQ was developing. We were flirting. We'd already broken this kind of neckline for the normal head and shoulders. You got this kind of double shoulder, and we put this other neckline in. It broke the neckline and went low. And then overnight, obviously, boom, back higher with the release of those. So it's pretty much nailed it yesterday. Might as well sing my praises while I can. But interestingly now, the market has got back above, this downtrend line. And even if you redraw this downtrend line, maybe off this point here, okay, so I'm going to just swivel that out here. You've reversed the trend line that comes down in here from last week, from the 22nd of July, from about the last week of trading. So you've reversed that trend line on the upside. You're also now flirting back with, you see the 2 necklines? Here's the neckline, whether you draw this neckline for the normal head and shoulders. You've almost got a double head. You've almost got a double shoulder here as well, double shoulder. So double-headed, double shoulder. And you've got the 2 necklines, which are kind of converging. We're sitting right on those necklines as well. So, recapturing the necklines. Is this going to be like the retest of the necklines and then back lower? Or are we retesting and recapturing? Okay. So, I think it's, I'm not going to, you don't, the big message, we say this on, at trade day, we don't limit you trading over events, right? Some other platforms do limit you on what you can't trade through big events. If you want to be on the challenge and blow your challenge, for a big event, that's your choice, and that tells us something about you as a trader. But my advice, I wouldn't be long or short into the event. What I would be doing is looking to enter very quickly after, right? So you have a stop entry, and you can get whipsawed on a stop entry. You can get slippage, less slippage usually on the demo accounts because that's the way the algo works. But I would be more inclined to either buy a break. You see these 2 lines we've got back on the top side. We highlighted these yesterday. Where are we? I'm going to recap those. They are 12, 3, 7, 5 and 3/4, and 12, just above 12,400, 407, right? I think if we break back above there on the NASDAQ, those 2 lines, okay, one of those, whichever, you could put a stop above one of those or both of those as a stop entry. That would be my trigger in. On the downside, it's a little difficult. I don't want to wait all the way to down here. You're probably going to be looking for a little sort of support in here. You got this little, after the impulsive move higher last night, you got this little low in here. Where's that? 12,237.5 is a possible trigger. We could be back below that though beforehand. It's a little bit more difficult on the trigger on the downside. I don't really want to be selling it once it's gone all the way down through here. You'd probably be a bit late to the party. You can put an order in below yesterday's low, but I would prefer to be getting in. It's probably, if you want to enter on the short side, you probably enter manually. If you want to enter on the long side, I put a long trigger through these levels up here. Okay. So that's the way I would be looking to do that. Similar story on the S&P, on the looking here, look, it's a little hammer pattern. Just going back to the NASDAQ on the daily, actually. Again, look, hammer pattern, down and back higher. It's a signal of a bullish shift after the 2 days down. No surprising that we've corrected lower, right, into a big event. You've got two massive events, really. One, the Fed, last meeting before summer recess. Two, we're going into big earnings season, going into all the big tech, right? We had a lot of big tech yesterday. Oh, I didn't go back on the tech. I'll come back to the tech. Someone remind me if I wind up before going back to the earnings, today's earnings. Need to go back to today's earnings. So we do get this rebound going on today. But if I go back into the S&P, now the S&P interestingly did then trigger. Remember, we hadn't triggered the through either the necklines here. We've got these two upward sloping necklines. We triggered through those yesterday and through the lows, but then really solid rebound. Again, look, flirting with the same necklines. Different kind of necklines sloping up in here, but still flirting back with those necklines. Interestingly, we've got above this swing high here. This swing high here on the S&P is at 39.61.75, and we took that out, okay, dipping back lower. Again, probably just above today's high on the S&P would be the trigger in on the top side. That's 39.66.25. On the downside, you got the little swing low in there. I would say back down through there, 39.44. Those would be my ins. I break above or break below through the Fed, kind of stuff. And again, you've got to be careful of whipsaw. The problem with the Fed is obviously you get the decision and the statement. The statement gives us the dot plot, and then the algos move the market really quickly. The algos just pick up on what's, because it quickly reads the statement, looking for keywords. The algos do that. The traders then, the day traders come in, take their take, jump on it as well. And then when you actually get into the nitty gritty and actually people read it properly, it can easily reverse. The other problem is 30 minutes later, you get the press conference, right? And that can reverse things around as well. So just be careful. You've got to be active. That's why I say don't go into these, and why we would suggest don't go in with a position. You're acting once you get the information and once the market's kind of made up its mind. Because there's going to be plenty of meat on the bone, right, guys? This thing could move significantly. If it's going to move 1.5%, 2%, doesn't matter if you miss the first quarter of 1/3%, because it could easily move 1 to 1.5, maybe on the NASDAQ up to 2% today. So so don't worry about missing that initial bit. Don't worry about being in beforehand. Because you're in beforehand, you got to get out and switch, and you could be blowing your stop, your daily stop loss, and you don't want to be doing that. There's good opportunities in here today. I'm going to do a very quick nod to the commodity markets, and then I will circle back on the earnings. So let's start off on oil. So oil, having had sell-off 2 days ago, hammer candlestick to the upside. Yesterday, strong rally, look, and then a big failure back lower, negative candlestick. Even though we have a little bounce in here today, I think that failure candlestick's more important. You see it fouled from below the trend line. You got the bigger now downtrend coming from the top, from the middle of June, lower lows and lower highs. You got this little downtrend in here in respect to this rebound, this corrective rebound. So we had a topping pattern in here. We'll see that when I zoom in a minute. A topping pattern in here on the sell-off, and then you've had a recovery failure. So on three fronts, you've got the bigger picture here, you've got this littler picture here, the smaller picture here is negative, and then even over the last 2 days, it's negative as well. If I zoom in on the 15-minute, you'll see in here, here's the recovery that we saw from the last week or so, and then we've neutralized that recovery with this sell-off, and then we've had that rebound, and that's been neutralized by this sell-off. And now the market's kind of chopping a little bit, but I think whilst below, you've got this overnight high in here is 96.66. Whilst below 96.66, I'll be bearish. If it breaks, you see this string of lows. You've got a low over here, and you've got this string of lows in here. They're all around the 94, like 80 to 75 area. Okay, back down through there will be a trigger to be bearish. Okay, remember you got the oil stock inventory before the Fed, so that's going to influence that. If you're an oil trader, you should know that anyway. Sorry, let's go to gold as well. Gold's become a little dull. In here, sideways city. Since we had the sell-off and then we've had a strong rebound and the market's gone a little bit sideways, and no massive surprise if you go to the dollar in here, dollar's doing the same thing. Remember, inverse relationship between gold and the dollar. So gold had, dollars had strong rally, top went in, and then it's been sideways for the last about 3-4 sessions. If we look at gold, it was a little bit behind. Whoops, sorry. Here's gold. Big sell-off, with the dollar rally, put in a bottom a week or so ago in here. It's been sideways since then. I think the bottom's intact. I think, I'd be playing this still from the long side. If I go to the gold on the 15-minute, you do have this potential topping pattern. Look, but it's faked it. Look, here's a head and shoulders, potential head and shoulders topping pattern. Or if it's not head and shoulders, double head up here, shoulder, elongated shoulder here. Whatever it is, it's a topping pattern. It's broken this neckline and it broke below that low there. If I put a horizontal line in here off of that low there, okay, you can see it just held there and it just pipped below. So it's clearly respecting this low over here. So this low here is 1711.7. We went down to 1711.5 and then we went to 1711. Where was the low here? 11.1. So it's rebounded over here on 2 occasions. You could argue in here another couple of occasions, rebounded here and it rebounded here. It's clearly defending this as a line of support area. I'm not aggressively bullish, but if you're trading gold, I'd prefer to be playing this from the long side. It's dipped, it started to rebound in here. If you zoom in even more, you've got this little counter trend running across the top there. A break above there. A break above today's high, the overnight high, 1723.3. You've got a little counter trend line. If you want to get in a bit more aggressively, you've got this line that comes down here across the top. You can go in up through that line there. And then you've got trigger points up here and up here as well. So these are 1725.8, 1726.4, but probably just through the overnight high will be enough, or even this little counter trend line to go in play from the long side. And you can have a tight stop down here, either below the current low, which we have in here, this little swing low here, 1718, or you got down here, 1715.9. Okay. Any questions, guys? Oh, no, I was going back to the earnings. Go back to the earnings. Any questions, throw them in the chat while I go back to earnings. Wednesday. Looking ahead to Wednesday in here. The big ones up post-bell, post the closing bell. We have Meta/Facebook, okay, reporting after the bell tonight, okay. A few others in there, Qualcomm, T-Mobile, okay. We've already had T-Mobile, actually, T-Mobile, slightly missed, okay. Bristol Myers Squibb, slightly beat. Boeing, actually Boeing missed, but not a big miss in here. That's weighing on the Dow a little bit this morning. Okay, remember, Boeing is in the Dow. It makes up a big part of the Dow. The Dow being a price-weighted index, where the S&P NASDAQ member are capitalization weighted. So the Boeing plays a bigger part of the Dow and can often drag the Dow around, actually. But it's not a big miss there for Boeing. I don't think it's down too much. Didn't see anything on that. So not impacting too much in here going into today. But watching out for Meta later after the bell today. And then going into tomorrow, it's going to be interesting because after the bell tomorrow, Thursday, we get Apple and Amazon. But Meta, the focus for this evening or this afternoon, evening. All right, guys, I'm going to wrap it up there. If there are no further questions, I'm going to wish you all a great trading day. Stay safe, and I'll be back with you another Bull versus Bear webinar tomorrow.